I'm calling this the free money investing experiment, or the pocket change portfolio, if you prefer. Here's how it works. I'm investing only money I didn't earn. That includes cashback from my credit card, rebates I forgot were coming, surprise refunds, class action settlements I didn't know I was part of, and rewards programs I didn't actively participate in. If it shows up and I didn't work for it, it qualifies. One day, a check for $21.91 showed up from a TransUnion data breach settlement. I didn't even know I qualified for it. It was completely unexpected, and honestly, I had no idea what it was at first, but it counted because I didn't earn it. That's what this account is for. True found money. Here's what doesn't count. I don't use coupons or apps that require scanning receipts. I don't buy things just to earn points. If I had to change my behavior or spend money differently to get it, it doesn't count. If I am going to place an order anyway and happen to get cash back from the card or app I'm using, that counts. This isn't about optimization. It's not hustle culture. I'm not out here trying to maximize deals. This is just a modern version of the change jar. But instead of coins, it's dollars and credits and refunds I didn't expect. And instead of saving it in a jar, I'm investing it. There's no specific goal. I'm not trying to reach a certain number or beat the market. I just want to see how far I can grow this pile of free money if I'm intentional about it. Every day, I post a short video showing what I got that day, how much showed up, where it came from, what I did with it, and what I bought. I started the account with an initial deposit of $1,561.29 on September 6, 2025, and I add to it every time a new bit of unearned money comes in. I keep track of how much came from cashback, how much from rebates, how much was truly random. The only rule is that I can't add any money I earned. No income, no salary, no gifts, no side hustle earnings, no freelance checks. If I worked for it, it's not eligible. This is about investing what would normally disappear. The kind of money that might otherwise sit in a forgotten rewards account or get spent on coffee or float away in a transaction fee. Instead, I'm treating it like it matters because it adds up. Most of the money in this experiment comes from cashback. I run all my household and business expenses through a credit card that gives me between 1% and 3% back on every transaction. That includes groceries, utilities, subscriptions, software, marketing, everything I can automate or route through the card. I do. Then I pay it off in full every month. That means the more normal life goes on, the more the cashback accumulates passively. No changes to my behavior. No added effort. Just using the card and letting the rewards build in the background. And that's how I realized this could be something worth tracking. Last year, I earned over $1,200 in cashback and bonuses, and I couldn't even tell you what I spent it on. It just disappeared into everyday spending. So this year, I'm doing it differently. I'm seeing how much of it I can make grow instead. Here's how the investing works. All the free money I collect goes into my Fidelity account. From there, I invest it in a custom portfolio of 14 ETFs. I picked these funds with the help of ChatGPT to keep things diversified, low cost, and passive. The portfolio includes VOO, the Vanguard S&P 500 ETF QQQ, Invesco Nasdaq 100 ETF VTI Vanguard. Total Stock Market ETF IWF iShares Russell 1000. Growth ETF IJK iShares S&P Midcap 400 Growth ETF IWM iShares Russell 2000 ETF IJH iShares Core S&P Midcap ETF ONEQ Fidelity Nasdaq Composite ETF SD ETF VShares Schwab US Dividend Equity ETF VGT Vanguard Information Technology ETF IXN iShares Global Tech VHT Vanguard Healthcare ETF IGV iShares Expanded Tech Software Sector ETF XLY Consumer Discretionary Select Sector SPDR Fund each day. I check which of the 14 funds makes up the smallest percentage of my portfolio and I buy more of that one. If I have more than $14, I split it evenly across all 14 funds. If I have less, it goes to the one I hold the least of. After the ETF trades settle, I sweep any remaining change into my crypto account and buy Bitcoin. I am not trying to time the market. This is just another way to use every last cent. Eventually, I may add Ethereum, but for now I'm sticking with Bitcoin only. So far, I've grown the portfolio entirely with money I didn't earn. The account started at $1,561.29 in early September 2025. By day 15, it had grown to over $1,875 in Fidelity, plus nearly $28 in crypto. And again, I didn't work for any of it. The results have honestly surprised me. The account grows faster than I expected, not because I'm putting big amounts in Boo, because I'm doing it with consistency and purpose. This isn't about getting rich off rewards. It's not financial advice. It's just an experiment to see how much I can build using money that would otherwise disappeared without a trace. If you're curious, you can follow along. I post daily updates, weekly recaps, and full walkthroughs like this. You, Dan T, have to try it yourself, but you might never look at your free money the same way again.